Let's talk a bit about the euro versus the USD. People don't think that anything is going to happen with the ECB meeting today, but that's not really what's important. What's important is what they're going to say about the December meeting and if they're going to hint about more stimulus to their already huge QE program. So let's talk a bit about the euro USD and the levels that matter. We're also going to talk a bit about the British pound. All right, so this is the euro versus the USD. And from a purely technical perspective, it is at a level we can buy it. All right, that's all good because we're approaching support and we're just above 116.79, which is that level that mattered for traders. However, though, we have the ECB rate meeting coming up today, so I will be careful because personally, I think they're going to say something that's going to force them to do that, effectively telling us they might do some QE in the next month. Now, they're already doing QE, and they have about 750 billion left that they haven't used. So adding another 500, I'm not really sure that's going to matter too much, and I don't really think it's going to help to bring back inflation under control because we have deflation in the euro area right now, and as well within close downs of many countries in Europe, we're probably going to see a double-digit recession. So again, going towards contraction. So it's a very, very difficult time. And overall, it would be good for the euro and their exports if the currency would come down. At the same time, we have the US presidential election coming up. And according to the polls, Joe Biden is going to win. And if he indeed wins, then as we know, President Trump is an anti-dollar policy. He wants the dollar to be weaker because it's going to help exports. I think that's not going to be the case with Joe Biden. I think Joe Biden is going to be rather neutral. So from a trader's perspective, then, what can we do here? Well, from a purely technical perspective, it's still bullish. So it's still perfectly fine to be bullish from these levels. The only issue, though, is because we have the ECB rate meeting, we're probably going to have high volatility. And with high volatility, we can usually just get spiked out of this position. So what's the best thing to do here? Well, me personally, I'm not holding any position in this market right now, just because of the increased volatility. But if we fast forward, maybe by the end of the day, if we're still above 116.79, then we might be at 118, 118.50. The alternative is that we take out 116.79 and could potentially trade to 116.11. But because of the heightened volatility today, it's not the best thing to do to open a position just ahead of that. And that's my view on the euro versus the USD. Now, this is the GBP versus the USD, and we're seeing overall just dollar strength. But here, the trend is bullish. It will definitely be impacted a bit about what's happening in the euro USD pair, but I'm confident or happy to just remain bullish here. I don't have the same issues I have with the euro USD because, again, it's like an ECB thing. It's not really something that's going to influence directly the British pound, unless, of course, we see a massive break in the euro USD that just causes it to trigger stop loss orders in something like the British pound versus the dollar. But of course, the British pound is not without its issues, and unfortunately, the way it's looking, it wouldn't surprise me at all if the UK leaves without a deal by the end of the year. The sticking points are, as far as I understand it, more symbolical than actually having a practical impact, or like a meaningful impact on the UK economy. But this is what the conversation has always been about. It's not really about the economy. It's more about the ability to rule yourself, set your own laws and things like that. And that's superseding the economic demands. But what does that mean for the currency, though? Again, if we have a hard Brexit, it will be natural for the British pound to slide. In other situations where, we had problems, the British pound has weakened. And I think this is with the Brexit referendum, right? We're trading on 145, and we had that very large slide, a big correction, and then we corrected strongly higher. Optimism of what's going to happen in the future, maybe the possibility to get a good deal, but then again, sort of dollar strengthening in general, and again nervousness around the British pound. And in general, guys, the British economy has not been operating as strong as it was before because people don't want to invest in something they don't have certainty about. If anything, at least in the financial sector, what I notice is that A lot of brokers are opening up branches, for example, in Europe. So they get regulated in Europe. And it's also something that a lot of big banks do, and they've done that for a long time already, effectively opening up like complete operations in Europe, so they can deal with the European business in Europe and not in the UK as has been in the past. And that's just the current situation. So again, to reiterate, trend is bullish for now. We have Brexit issues. Of course, it's not something that people talking about it too much. And I'm sure about 128.55. I think we go up to something like 131, maybe 132. We have in the past been bullish from these levels, and so far it's been working out good. And let's see if it works out good once more. All right, don't forget to watch the rest of the videos we have here on our YouTube channel. And as well, don't forget to like and to subscribe to the videos if you want notifications when we publish the next market outlooks. Thanks so much for watching, and I'll see you guys soon.